Good afternoon, everybody. Hope you're well, enjoying the sunshine. Welcome to the next of our Essential series. These are topical and technical insights into the world of private client world. Sorry, that is just, technical stuff. Oh, is that, wait, are you still there? I'm still there, sorry. Anyway, today we're going to have a really thought-provoking conversation as we sit down with Jo Shropshire. She is the co-founder and managing director of Benesys. They are a leading impact and philanthropy advisory firm, and we're going to be exploring how they guide clients from charitable intentions to meaningful and measurable outcomes. We're going to discuss how values shape giving, the strategic tools used to drive real change, and what it takes to move beyond transactional donations to transformative impact. If you do have any questions, feel free to pop them in the chat or reach out to myself or Jo after the conversation. Please note this is for educational purposes only. But yeah, really excited about this conversation and I hope you enjoy it too. I'm just going to get Jo in now. Hello, Jo. Good afternoon.
Hi, how are you?
Super. Really good. How are you doing?
Good. I'm really well, thank you. Very glad to be here.
Yeah, well, we're glad to have you here. Before we kick off, why don't you tell us all a little bit more about who you are, what you do, and why you do it?
Absolutely. Jo Shropshire, thank you so much for having me here today to chat with you all. There's nothing I like better than talking about Benesys, which is a business that I co-founded 7 years ago, which we can explain more a little bit about helping high net worth individuals and families and help them to be more effective with their giving. Quickly after a period of significant number of years working in finance, I made a change working in philanthropy, and hopefully during the course of this conversation you will pick up the robust approach to finance that we use when we're working with our clients in how they navigate the giving landscape. So there's some real robust financial principles in our approach to philanthropy, which I'm looking forward to sharing with you.
Love that. And I love that different approach as well, because you can come at it in a multitude of ways, but ultimately, if the numbers aren't running, you can't measure your impact as effectively. So I think that's a really, really good approach that you guys have. So was there a defining moment that sparked your passion for social change?
Well, no, honestly, there really wasn't. And actually with my co-founder, that might have been more the case for her. For me, it was really a gradual realization of the desire that others had to make social change. And I'd started to notice within my own personal networks, my professional circles, that people wanted to make a difference, but didn't. And then on further probing, realizing why was it that they weren't making the change that they wanted to make? And that was for a number of reasons. One, a lack of time, a lack of information as to where should they direct their charitable donations. And actually at this point, at the time that we started Benesys, a general mistrust in the charitable sector. And so I began to look at these barriers or as if inefficiencies in a market, and thinking that if we could remove those barriers that were preventing people from giving, then hopefully we could help people create the social change that they were looking to see. So with Benesys, we set about looking to improve the transparency of what charities do, providing greater information and research of particular social causes, social problems, and to really build trust in the charitable sector, as well as identifying exceptional charities that could help people meet their desires of social change. And so for me, it wasn't really a spark. It wasn't really a personal epiphany. It was more an observation and a recognition of a broader appetite for impact that required a number of conditions to exist for people to be able to feel comfortable giving to charity and then to make the change that they wanted to see.
I love that. You're greasing the wheels for impact, really, making things just a lot more streamlined in what can be quite a, as you say, mystical world in terms of efficiency.
You don't know what you don't know.
Yeah. Well, that's it. And they need someone like you to hold their hand and guide them through that and actually help them to make sensible and impactful decisions. So I love that. And so if we go back to actually looking at what the client journey looks like, what is your typical advisory process? So from initial consultation to implementation, how does that work given your frameworks?
Yeah. So We offer a bespoke service. How we operate with our clients, all of our clients have clearly different needs, as we know when we're working in the advisory space. But our process is consistent across all of our clients, and that's kind of in 3 phases: a discovery phase, the development phase, and the delivery or the implementation, the execution. So very quickly, in terms of the discovery phase, very collaborative consultation with our clients, where we really do explore and get into real detail of what our client aspirations are. What is it? Where do they really want to make a difference? In that, we find out what their values are, and we really help them to articulate their vision. Wherever they are on their philanthropic journey, they could have been just going through a liquidation event and they've never even thought about philanthropy, or they could be at the situation where they've been given ad hoc within a number of years and they're wanting a little bit more formal structure. And so we look at also their aspirations, and then we find out what are the resources that they want to allocate, and that could be financial capital, and that could be non-financial capital, material, intellectual capital. So with that information, then we move to the development stage, and that's really where we craft a strategy, a giving strategy. We take all that on board, we create a mission statement, we create definitive goals and measurable success metrics. We document all of this in what we call a giving manifesto, which is really our client's roadmap for giving. And this is really setting the tone for their giving in the future. And a key part of the giving manifesto and the strategy is us building a portfolio of charities that really is a portfolio of charities that have been risk assessed, that meet our clients' values, that meet their interests, and importantly, their risk appetite, because all of our clients have a different appetite to risk and risk tolerance. And so we take that into account when we're building their portfolio. Once we've built the portfolio, once we have the roadmap in place, then it's about implementation and execution. And then really over a period of time, and normally we look at a giving year, strategic donations, financial or non-financial donations are made over the course of the year to risk-assessed key charity partners. The charity portfolio is monitored on an ongoing basis, and then in due course, normally after 6 months or 12 months, depending on our clients' desires, we evaluate the performance of that portfolio. And we'll be looking at the performance of the charities and how those charities meet according to their own goals, and also how the whole portfolio meets our clients' impact goals. And we'll look at the long-term impact of that, and we prepare tailored impact reports for our clients so they can really see the level of detail of where their charitable donations have gone, and also having the comfort of that roadmap, their giving roadmap, to know where they're giving and how they're giving.
I think that's super interesting, and also looking at the non-financial capital element of giving as well. And I think that's often overlooked, perhaps, or just it's that unknown. And it's like, I have a network, I have resources, I have all of these other things. I don't just have to give money, I can give tools, knowledge, access. And I think that's a wonderful way of opening up philanthropy to many different people as well. So
Absolutely.
just you do mention about your frameworks and your tools. What do these look like to assess whether or not the initiative is making a real difference?
Well, we use a number of tools actually to see whether they're making a real difference. Qualitative, quantitative tools to assess the performance of the overall philanthropic portfolio. But in terms of our framework, the first thing that we would do is we'd look at the performance of the individual charities, and we'd look at how they're performing according to their own goals. And that's the first preliminary aspect that we look at. Where there's variance in outcomes, then we go back to a charity's theory of change, and we look at preliminary level, maybe the assumptions were not quite right at the outset, and we look at that. Second tier, we look at it on a holistic level at our client's portfolio, and we look at how the portfolio as a whole has achieved their impact goals, whatever those personal impact goals are for our clients, and we would define those in the giving manifesto at the outset. We look to see that they've been achieved. And that in an impact report I mentioned, that can be quantitative, but also for there we'll take qualitative information. So we'll be including case studies, We'll have maybe excerpts of surveys that have been used that our charity partners might have had. So we'll use all of that kind of information to make it a very holistic presentation of the outcomes and of the impact that's been created. And finally, we also do look at benchmarking where our clients' philanthropic portfolios are against the UN Sustainable Development Goals. And that's been a really interesting one we're doing actually in the last 2 years, where we'll look at a matrix and we'll see where our clients' impact portfolios track against benchmarks of the United Nations Sustainable Development Goals. So very holistic and kind of three-tiered level of evaluation, and really looking at measuring the impact and the success of a philanthropic venture.
I think that's fantastic. And so how how do you get these clients to move beyond checkbook charity? I think that's sort of like what people imagine very from a basic point and starting point of charity is write a check, off you go. But actually, as you are describing, there is so much more to be an active philanthropist, let's say. How do you guide your clients into being more strategic givers?
Yeah, and it's interesting, full disclosure, someone will be coming to work with Benesys because that is maybe the level of detail and the level of guidance that they're looking for. And I think, again, nothing wrong with checkbook giving, of course not, or ATM. Some of our clients come to us and say, they're feeling a bit like an ATM. And when we start working with a client, we always do a forensic analysis of the giving that they've done to that point, because later on down the line, we like to do a comparison of where they were and how they were giving initially on a fairly unstructured ad hoc basis, and then looking at using one of our impact reports at really the level of detail, knowing exactly where their money has gone and how that's performed against their certain measurable goals. What's also been interesting, so our impact reports are a great sense of pride for our clients, often, that they can really see with this level of detail that maybe they've never had before and never thought they wanted, actually, just to say, then going, actually, we can really look at these, our giving in so many different ways. But one of the really good things about more strategic level of giving is, from our clients' perspective, to help them articulate their goals, to have it very clear in their mind what they're trying to achieve, is a great way that then our clients can buffer those approaches that they receive from charities, from well-meaning individuals that say, could you come and support this? We'd really love you to fund that. Well, having a very well articulated, very clear strategy with your giving, then is a very clear answer to say, thank you so much. This looks really interesting, but actually that's outside the realms of my portfolio. This is the strategy. This is how we make change. This is where we give. Perhaps if there's another aspect of giving that you want me to look at, that's fair enough. But it's actually helped our clients feel very confident to say no when they're approached to get their checkbook or get their ATM out. So I think it's a sell in itself when clients realize that empowerment, that level of empowerment they have to be able to say, no, thank you very much, with all due respect. This is what I'm supporting and this is why.
Yeah, well, it's almost like viewing themselves almost, well, I guess if you went into sort of like a fund manager, it is their investment mandate for them, and then it's sort of, this is actually what our remit is. And if it doesn't cover that, then, you're not for us, in a way. And I think that's
Absolutely
great, actually,
right.
empowering and protecting the client.
That's true. And I mentioned at the outset about, trying to take these principles of investing, financial investing. Our approach at Benesys is very much about, really following the money, really understanding why would you do one thing with your for-profit assets, your financial investments, and not take the same kind of care and diligence with your non-profit assets. And we're trying to give that level of understanding, that level of authenticity and transparency, so that people really understand that where their money is going. And maybe it doesn't always give the desired return, the social return on investment, but you know why, and you're able to take a decision, an informed decision, to change that in the future.
Exactly, it's a more sophisticated approach to giving, which is fantastic, especially with the types of clients who would be really active. I think they like to actually, number crunch a bit and be very logical, as well as being proactive. I think that's fantastic. And then I guess that breaks it down into passion-driven, evidence-based decision-making. Sometimes those are two very different hats. How do you balance that with a client?
And it's a really good question, because I think we know, it's common sense. People want to give where they feel emotion. Of course, in some cases, donations are very emotional things to undertake, and they are driven by personal lived experience, perhaps by passion and emotion, and that's something that we'd never want to quell. But we're always guided by our clients. So if we had the case where a client came to us and they were particularly passionate about a particular cause, then we'd really try to harness that in every way we could. And that would mean where we would complement their passion by researching the sector and the cause within which they're passionate about. So, for example, men's mental health, or suicidal crisis in men. If this was a passion, we'd really research the sector, and we would find the most underfunded and the most overlooked areas of where a donation can make a difference and to create the greatest impact. So we would be really looking to help find those charities that are working in those underfunded, underserved areas of that sector, of that cause, and then we would help guide our client into funding those charities operating in that space to really maximize their passion and ultimately their financial donations. We'd also like to, just as you were saying before, Lottie, about thinking, we like to think laterally and not just think about a checkbook. We like to think about other ways. We look to harness our clients' passion and motivation by helping them think about becoming perhaps an advisor on an advisory board for a charity, becoming a board member of a charity, becoming an ambassador on the charity, and thinking of different ways that they can harness that fantastic passion that they have. And because the more that a client is engaged with a charity, the better it is for both parties. That's fact. So that's the way that we would help to balance the evidence-based giving together with that passion, really harnessing that passion as much as we could.
And then I suppose a bit of a curveball one, but using your manifesto then, sometimes if it is a real passion, give that they've done, if it's not showing actually when you've done the reports for them that it's working, I suppose that's quite a good mirror for the client to say, actually, maybe I could do greater impact in another area that actually needs it. And yes, it might be my passion, but actually it's not having the outcome that is benefiting the most people.
Absolutely right. And that's why having this big feedback loop is so important with understanding where your giving is going. Because again, in finance, things can go wrong. Things don't perform the way that we expect them to. Hopefully there are no surprises. And that's one thing that we talk about with our clients. We don't want surprises. And, there might be events out of our control, but that's absolutely right. If you're following the money, if you have a really disciplined approach to how you're giving, and your understanding of what potentially the outcomes are, where they're not that way, then you're able to look at it and think, okay, we need to refine this. Maybe this isn't the area, just as you were saying, that we need to be devoting our funding or our time. Let's go back to the drawing board and think about this in a different way.
Yeah, I love that. I love that. So how would you define effective philanthropy today?
So for Benesys, I would say that for our clients as a funder or a donor, I think them having a well-articulated strategy that's authentic, and that's really, important. It's well-defined with achievable goals and full transparency, understanding what is being funded and why is effective. Just as I was saying, there shouldn't be any surprises. Things do go wrong. But we should have been prepared at the giving manifesto, at the risk assessment stage, when we're looking at the charities that make up a portfolio, to see that there might be areas to observe. And so there shouldn't be any surprises. And then really, for Benesys, I would say that for philanthropy to be effective, it really requires a trusting and open relationship between the funder and the charity partner. Open communication. If things are going wrong, that there's an honesty about that, and then a flexibility on the donor's side to be able to, with full information, make a choice about how they want to take things forward, whether they continue to support because they can see and understand what the problems were. But that trusted, open dialogue of an equal partnership for me is what would constitute effective philanthropy.
Yeah, it's almost sort of like a VC approach. It's, going in, having that, that communication channel with the financial backing and thinking, okay, we want this to succeed. How can we help you to succeed as a charity?
Absolutely right. And actually, to the point we mentioned earlier on, it's about understanding a client's risk appetite. And if they want to take a more venture philanthropy approach, just as you're mentioning, then obviously their level of risk, their appetite for risk is higher than another client that doesn't really want to take that level of risk. And so knowing that at the outset is great with the community. We know what we're looking for. We know what the expectations are. And it's effective because our clients also knowing that they're willing to take the certain risks that they are. It's very well articulated. It's very well understood, and our clients are very well informed. So I think that's kind of the most effective way to give.
Yeah, I think it's very exciting. So what, given, you see a lot of different charities, causes, places of impact required, what current trends or, areas of impact are you most excited or concerned about? Are there any sort of dark areas where you think maybe there needs to be more focus?
Well, exciting is in the 7 years within which Benesys has been operating, it's been something that's kind of been bubbling away in this idea of increased collaboration. This is really exciting. Between initially amongst our clients, obviously we're taking a microcosm of our clients, but this idea of funders collaborating with their charity beneficiaries. If we have an innovative donor that has a different kind of background, that's open-minded, is quite creative, and we have a progressive CEO from a charity, a forward-looking board of directors, this can really invigorate things for a charity. This can really invigorate the way they approach fundraising. This can really invigorate the different opportunities for a charity. So having that open dialogue between a funder, a client, a donor, and their charity partner can really unleash lots of things. Great things. And we've seen that amongst our client base. And also in terms of what we've seen with our clients is this ability to our clients wanting to leverage the support that they give. So having this awareness that they are providing financial support, but thinking slightly larger, where they're realizing that then they could give a donation, but for example, they're understanding that there might be match funding campaigns that are ongoing that they're able to participate in, that then they can maximize their donations. Then take it one step further, that they can actually be a pledger in a match fund campaign, which means that they can really exponentially increase the donation that they give by encouraging other people to give. So this idea of leveraging the support that our clients give is something that we're really seeing, where they feel that they're thinking creatively, that they have material capital. They might have a membership to a club that they think that they can maybe donate to a charity partner where they can host a fancy event. And all of these things are things that we're certainly seeing with our client portfolio. And I think that's something, we're looking externally to particularly with charities that are looking to engage more with business. Also, that's something that these collaborations that we're seeing. And then finally, probably on the exciting side is, the rise of collaboration between funders. So the rise of giving circles, collective giving, where people are coming together, they're wanting to maybe dilute the risk, but they're trying to do more with less. Maybe they can only donate a certain amount of money and they want to join forces with somebody else that wants to donate. And they're coming together to be collaborative, to be consensual, to be strategic about a particular cause that they're all passionate about. And then them working together and getting all of the upside of collective giving, and also getting the upside of the impact that they're creating. So that's the exciting things. Concerned about, not very much actually, but no. One of the things that is just quite probably is intriguing and disappointing, I would say, is the lack of awareness or understanding about some of the tax benefits around of giving. And one of the things that's really underutilized in the UK is gift aid. So if I could just use the shout out for gift aid, it's so underutilized. And if you think about it, and whether it's a lack of understanding, and it isn't, each time that you're donating to a charity, the government will increase that donation by 25%. It's a real no-brainer, and it's great for charities. And when we meet with our charities, they're always saying, I don't understand why people don't use gift aid. 23% of eligible donors in the UK don't use it. And so, it would be great, just an easy win, just to say, what prevents people from just clicking that box when they're giving their donations. So if I could say anything, use gift aid.
I think that's really sensible as well. And well, I suppose you can only donate that 25% if you are a taxpayer. So if you're
that's
a
non-taxpayer, that's right. If you're a UK taxpayer, that's absolutely right. Yeah, that's right. So a UK taxpayer. Yeah. So there are certain provisos, but I do think, that 23%, a quarter of eligible donors in the UK, surely that we can make that a little bit lower.
Maybe that's something with the user face or something on this thing. Maybe they think it's an additional charge rather than an actual government donation on their behalf or something. There's something that is just like, why would you not do it? It's a no-brainer. Yeah, they almost need to do it as an opt-out rather than a, like you have to opt out.
You're right, the opt-in. And it's in the philanthropy space, it's a real bane, because charities do talk about it so much, and there's been research into why is it that people don't, they forgot about it, they didn't get asked it, and all of those things. But it's minor, but actually when you think about it in terms of extra funding for charities, it's a really big deal. And as I say, on behalf of our charity partners in our Benesys charity platform, there's the shout out: use gift aid if you can.
Go, everybody, gift aid it, because I suppose even places like McDonald's, I've been there a while, when you go and pay at the end, they'll ask if you want to like round up and give a donation to their Ronald McDonald charity or whatever. There's a lot of big corporates who have sort of ingrained it into the payment process in a way. But again, I think possibly with big firms like that, they might be a bit like, oh, is it actually going to the charity or not? But with gift aid, it's from the government. Why would you not do it?
Yeah, absolutely right. And it's just, if you're going through that process, it's a bit of a no-brainer. Anyway.
Okay, no, that's good. I like that. And so, how do you see the role of philanthropy evolving over the next 5 to 10 years?
Wow,
how would you like it to evolve as well?
Not wanting to be a downer, because this is my favorite chosen topic, and I could talk about this all. There's so much good, but having the understanding of the need where we are right now, and not wanting to, everyone's aware of the environment with which we're living now, and we're in an environment of polycrises. Need is so great, and the need for funding, obviously in the aftermath of the reductions in public funding within the USAID, is huge, and also in the UK. So there's no doubt, unquestionably, it's going to be big pressure on the private sector and philanthropists, and for people to really try to help to fund the gap, the need, because the need is great and getting greater. Ladies and gentlemen, that's actually not going away. And so we really need to think much more about it. So, one of the things I talked about, what we're seeing in the next 5 to 10 years, is increased pressure, encouragement. Maybe there's opportunities, tax incentives on public policy to encourage the private sector to give and think more strategically about giving. More collaboration. I mentioned earlier on that I know that even larger INGOs that are operating and that are really in position of having lost 40% of their funding through changes with the US administration, are looking really larger corporates to think about how can they tap into getting into the corporate coffers, really, of the private sector, and trying to incent businesses to think more strategically about where they're giving, more than just having a charity of the year. So that's one thing. I think there's been so much talk about the great wealth transfer that we're going to see. So the passing of wealth to the next generation. So I think we'll see a proliferation of wealth managers. We're already seeing that anyway, of wealth managers, family offices, really trying to incorporate philanthropy into their offering. That is something. Why would it be that when we're talking about the next generation, about legacy, where we talk on the one side about investment, why would we not put that together with financial investments with the non-profit side of the portfolio, so that you can look at legacy, we can look at values on both sides, the for-profit and the non-profit. So I do see that will be something that will be maybe merged into the wealth management space much more than it is currently. And I think there's an appetite for that. And I think that will evolve. I think we'll see more of a normalization and a proliferation of trust-based philanthropy. And for those that certainly didn't want to talk about using jargon or those terms, but where Mackenzie Scott, particularly in the US, has been giving charities on an unrestricted basis, which is what charities can do more with. It enables them to plan, to budget, to think ahead, which is really great for them, without giving them too much bureaucratic hoops and administrative guidelines. So this element of trusting that the charity knows where to apply the funding, where best to apply the funding. I really think we'll see much more of a proliferation of that in the UK, as that's been seeing in the States. And really, from our perspective, we always try and encourage our clients to give on an unrestricted and longer term basis, because that really is the way that charities can really make a difference. They can really invest in their programs, they can really plan, and it really helps their budgeting. So I think I'd see more of a proliferation of that. And then on that side, with the increase in trust-based philanthropy, also the increase in the importance of outcomes monitoring, impact evaluation. I mean, again, we're seeing that now, but I don't see that going away. I'm seeing that being much more about, if you're giving on an unrestricted basis and you're trusting the charity, then you absolutely want to be following the process of a charity and looking how their performance is down the line at 2 years, 3 years, 5 years. So I see a more of a continuation of that.
I think that's fantastic. Yes, and I love this idea of the trust based and the unrestricted, but in those ways as well, you're still overseeing the process, even though it is unrestricted. You would still be able to sort of raise your hand and be like, oh yeah, I know this is unrestricted, however, have you thought about doing it this way? Or them bringing in their non-capital resources and saying, hey guys, see you're struggling a bit with this, how about I lend X, Y, and Z or whatever, and you can do it better.
Yeah, and actually, just to come back to our Benesys process, and this is to encourage our clients to give on an unrestricted long-term basis. This is why the level of due diligence that we do at the front end, if you remember in our process, that the giving manifesto, to create the strategy and building the portfolio, we do a really high level of due diligence and risk assessment across the board for our charities, in not just their finances, their financial resilience, in their governance, in their operations, in their adaptability to change. And we look at all of those things that we can give our clients comfort that to support on an unrestricted basis, to give the trust in that charity, that is on the basis of that, of a favourable process of due diligence, that they feel comfortable, all being well, to be able to give on an unrestricted long-term basis. That's the essence of our front-end due diligence process when we start working with a client and building a charitable portfolio.
Well, exactly, and that helps to remove quite a few of the barriers then, in terms of access and awareness of what a philanthropist is going into, because as we said right at the beginning, there are so many options and so many charities that may or not be effective, or may be struggling, or there might be some hurdles, or something with the charity commission, or something in there which would be an administrative burden. Actually, you're easing that.
Yeah, absolutely. There are over 200,000 charities just in the UK alone. So to be able to navigate those, you need to be very focused, and they're not all doing great work, sadly. The ones we work with always are. Just,
they got you behind you.
Charity partners. So.
They should be. They could be. They could be.
They could be.
They could be. Okay, so what advice would you give to someone looking to align their wealth or their career with purpose?
Speak to an advisor. Find a good advisor.
Yeah.
No, I'd hopefully like to say that the things that we've talked about become evident. Really start out by having a really sound understanding of what matters most to you. You know, what is the change that you really realistically think that you can make? And then thinking also honestly about the resources that you have to give. If it's not necessarily about a financial donation, there are other ways, as we were talking about, that you can make change, that you can use your skills, use your talent, use your connections, use these things for good. And it's about being quite strategic about those things. Thinking about the resources, thinking about the sector, the change you want to make, and then identifying some charities and starting to talk to those charities and finding out what it is that they need, finding out if there's the way that you can help them, and really being clear about what the goals are when you're working with a charity. Is it the level of engagement that you want? Is it about connections? Is it about when you're working with a charity? And these are the things that we ask our clients when we start working with them. You know, is charity engagement important to you? How engaged do you want to be with a charity? Is it about personal accolade? And that's absolutely fine if it is. We need to know about that at the front end. But being really honest with yourself, you know, when you're wanting to create an impact, when you're wanting to work with purpose, you know, what is the real driver of that? And really feeling comfortable with that. And then honing in on those charities that you think might be able to use your skills. And if it's about financial donations, really giving on an unrestricted basis and keeping the dialogue to find out and asking them, you know, what did they do with the money? Not quite specifically saying, oh, here's my £500. What did you do that? But being very upfront about it's okay to ask for an impact report. It's okay to ask charities, you know, for more information about their operations. Absolutely fine. Having dialogue creates open communication between charities and funders, and that's a great way to go. But if all else fails, do speak to an advisor. And I'd mentioned this to Lottie. When we founded Benesys 7 years ago, our mission was to drive sustainable support to well-run charities. And that is the essence of what we do. If we have a conversation with somebody and there's no upside for Benesys, only that a charity gets some funding or gets a great connection, that's a win as far as we're concerned. We're about invigorating the ecosystem. So if anyone wanted to have an informal chat on a non-obligation basis, we're very happy to meet up with anyone just to talk through some ideas. We're actually very open to have that. It's all about getting more private sector funding resources into the charitable sector where they can be well spent, well allocated, well applied to maximize impact.
Oh, brilliant. I love that. I love that. Invigorating the ecosystem with collaborative charity, spot on. Gift aid, you know, we've covered so much here. Thank you so much, Jo. And I think if anybody watching this does have any questions, please do reach out, either Jo or myself. And I think we might actually share a copy of your impact report on one of the links. We'll find a way to link it, because as you say, they're an incredible tool. And I think if people get to understand how they work and the benefits for it, then it's a great opening tool.
Happy to. Yeah.
Amazing. Thank you so much, Jo. Thank you for everybody for tuning in, either live or later on. And yeah, we'll see you very soon. Thank you.
Thanks so much, Lottie. Thanks, everyone. Have a great day.
Thank you.
Bye.
Bye.